Greetings, my YouTube family. Thank you so much for visiting my channel. And today I'm going to share with you my review of the earnings for NVIDIA for the quarter four 2023. But before I get started, I'm just going to disclaimer that this is just content for educational purposes. As such, it should not be taken as investment advice. Now, I'm going to walk you through what is NVIDIA, what do they do as a business, and also the major highlights for the earnings that were um, actually released yesterday on the 21st of February, and also a quick financial overview of the income statement, um, the balance sheet and cash flow statement for the past 10 years, and then also, the consideration, do I think this is a good business to invest in? And also, what are the merits and potential risks of investing in this business? Now, um, for those who don't know me, my name is Isaac Jonas, and I'm an economist, but I'm also, a content creator like I'm doing now. I like creating content so that, people can make informed financial decisions. And I am a retail investor, and I like investing in the US stock exchanges. And now moving on, in terms of this business, NVIDIA is a top designer for discrete um, graphics processing units, and that enhance the experience for computing platforms. And because of the artificial intelligence, that is happening as the next big thing, what this means is NVIDIA is positioned to be a leader, in terms of the firms producing the chips, that are used by the various, businesses around the world, and also in the gaming and data centers. So the firm is, growing its revenue, as you see, so it is well positioned. But as a starting point, NVIDIA, in terms of their 52-week high, it really has been doing really, really well, to the extent that it crossed the $700 mark for a share. And uh, a year ago, it was as low as 222. So what this means is, it has really gone up. It has had a good run. But on a glance, the things that I look at, when I even consider investing or analyzing a stock, is I look at things like return on equity. You can see here it's almost 20%. So if I invest my money, it means in 5 years, that money will have doubled. So that's something that I look at. Now, I also will explain, I like the fact that they buy back shares, right? So when the companies buy back shares, it means, the available shares, the number of shares, is reduced, and it might potentially increase the share value. So that's a good thing. And they also offer an annual dividend of 16 cents per share, but this can change, right? And this is per year, and these are some of the numbers. But now, digging deeper, I will start off, by just sharing the outlook. In 2025, the fiscal year, they are projecting a 24 billion plus or minus, increase in revenue. So it's projected to growth, which is a good thing. And also their profit margins, they are forecasted to be in that region of 76 to 77%. So they are having a very good profit margin, which is good. And then, their operating expenses to be between 3.5 to 2.5 billion. This number would make sense if it's compared to the peers, in other words, other businesses in this particular business, like SMCI, microchips, and other businesses that are in this particular sector. Now, moving on, specifically on the earnings highlights, you see that when they released their earnings on 21 February, they beat the earnings in terms of the earnings per share expectations. The analysts were expecting 4.64%, $4.64 per share, but now it was reported to be 5.16, which was a 11%, above expectation, which is great. And it has, uh, been also, the market has been responding to this, because today it went up by 16%, and I'm recording this on the 22nd of February. So, and the broader market also rose in addition to other factors. So this was a good thing. Now, in terms of their specific highlights, I got this from the Security Exchange filing that I did, the NVIDIA administrators. You can see that their revenue, it went up by 27%, and it was 18.4 billion. And you can see that they are actually collaborating with other businesses like Google through their senders, which is good, because when you collaborate, you can build on synergies, right? So this is fantastic. And also they are working with Amazon as well to grow their business. So this is something that is good, and integrating their artificial intelligence session and sector. And you see that on the gaming, their revenue was 2.9 billion, which was a 15% growth in terms of that sector to 10.4 billion. So it really increased the revenue, which was good. And they launched a product, GeForce, and this is starting at a price of $599. So this is good. They are launching new products, and you can see that here their revenue, even on the professional visualization sector, was up 11%. In the automotive sector, it was up 8%. So in other words, it really did well. Now, when I want to invest in a business, I look at their financial position. So the first thing that I do is I look at the income statement, right? So I look at the profit margins, right? Gross profit margin. Let's say if I look at the gross profit margin, you can see here, this is from 2015, right? So for the past couple of years, I can see this number has been growing, right? Growing. So which is something that I like. In 2020, for Q4 in January, this is 31 billion, right? So which is good. I also look at the trend. You can see that it was growing, right? And then the net operating income has also been increasing. I can see here. These are the things that I look at. Now, when I look at the balance sheet, I go to the long-term debt, right? I see, from 2015, it has been increasing. But before I jump in to condemn them for increasing their long-term debt, because, when you borrow, if the capital is cheap, you can then, grow your business, right? I look at the free cash flows. On the free cash flows, you can see that the free cash flows has been increasing, much faster. So it means they can service their debt. So I quickly do a ratio of, the free cash flows as to their long-term debt. And if that number is like 3 or less, then I like that business, because then they can pay off their debt on time. Now, other things equal. Now, I also like to see what other people who, the money and the resources are doing. I look at some gurus. You can see here that, in terms of these people, they were increasing their shares. I got this from Rule 1 2 box, and you can see that the Gates and Melinda Foundation, they increased their shares in the third quarter of 2023. So they are buying into this. But also, there are also other funds that are buying, that are selling off, out of this business. You see Third Point LLC, right? It closed the position, but probably it might be for other reasons, because they may have made their money. So I like to look at this. Now, I also look at the competitors, like what are the competitors in this sector. You can see there's Taiwan Semiconductor Manufacturing, Broadband, Advanced Micro, but I like the fact that, when I look at the return on capital invested, 14%, return on equity is 20%, which is fantastic. The revenue is great if you compare it with other businesses, right? So I would say, in conclusion, with regards to this business, it's a strong moat. In other words, a competitive advantage. They can change their increase or decrease their price for the products without necessarily losing the market. So that's good. They have good management, is seen by the good financial position, and they currently have a positive outlook. But for me right now, am I investing? I'm invested because I own exchange traded funds like SPY, which is, it tracks the S&P 500, so it has exposure to NVIDIA, and I also have QQQ, and that way I don't have an individual a position for the stock per se, but I would consider it if it drops to some level around 500. And these things happen because sometimes they miss earnings in the future, or maybe there's another macroeconomic environment like from the Federal Reserve in the US or other geopolitical reasons. But I'm just having cash ready because I believe this is a very good business, and with the projection of artificial intelligence, I think it is a good potential, and it has beaten the earnings for the past couple of years. So if it continues to grow, there's a huge opportunity, right? But currently I believe the valuation is high, and my thesis is simple: I want to buy low and sell high. So I will wait for it to retrace. Let's say if it retraces to, let's say, $100, $600 per share or 500, I start to add more shares for long-term positioning. So I wait for events to happen that might result in a sell-off. Now, I believe, in conclusion, it's a fantastic business. They have a moat, in other words, they have competitive advantage, and they've been beating expectations. But just now, it's not yet the time for me to open a position because I don't have a position on this particular stock. So that's it for now. That's what I think. I thought I would just give my views that this is a wonderful business, and what I think about their earnings. They did a fantastic job, and they are positioned to grow, as their CEO said. So thank you. And if you haven't subscribed to this channel, please consider doing so. Thank you so much, and have a wonderful day, and may the markets be with you. Thank you so much, and bye-bye for now.